je een hekel aan advertenties? Wil je in alle rust naar je muziek luisteren? Meld je dan aan voor SoundCloud Go, zodat je reclamevrij en offline kunt luisteren. Met SoundCloud heb je toegang tot meer muziek dan welk ander streamingplatform dan ook. Meld je vandaag nog aan voor SoundCloud Go.
Hello. Uh-oh, I can't hear you. Say something again. No, not really. Hold on. Oh, wait. That's a little bit better. All right, say something. Okay, all right. That's a little bit better. All right, so we can do this two different ways. I think maybe the better way, technically, would be, well, you can see my screen if I share my screen. I'm just trying to think of those on TikTok. So I'll tell you what. Then we can stay on this call, and I will stream the call from here. They will hold on. Let me make sure that they can still hear you. I think they can. Go ahead and say something. Wait. Say something. Yep, they should. So I can hear computer audio and you. So I can hear you, but they can also hear your voice as well. So, so then what we're going to do and what I plan on doing here, if you copy and paste your username in the chat, and I think it's Manuel Trades Forex, right? Or something. Okay. All right. When we get towards the end of the call, I'll suggest that they can go and visit you and go through your process with you as well. All right. So let me bring up my screen so you can see it. Okay. And then, okay, I see that. See that. Let's give it a try. I've got about 45 minutes. I was live streaming this morning for about 2 hours. Oh, okay. Okay. Oh, yeah. Okay, so I'm going to call this building microstructure. And what we're going to do before we go live, what we're going to do is we're going to talk about what moves the market, kind of a traditional orientation, and then build the or draw the analysis with the pencil. Look at the indexes, identify the turns, and then identify where the market's moving strongly in zones. And then I'll use some rectangles on the charts to identify those zones. And then when we're all done, I'll bring the candles back up and it'll perfectly align with whatever the market wanted to do. All right, so it'll be a good exercise for those that follow. All right, so let's give this a try. So make sure you don't have your TikTok speaker on. Okay. So a couple of seconds. Okay, so there's hello. All right, so we're going to build microstructure. You still there, Manuel? Okay. So I don't know if they can hear you, hey Pete, on the stream. If somebody on TikTok can let me know if you can hear Manuel speaking, then it'll be great. Go ahead and say something, Manuel. Yeah, that's fine. Yeah, dad jokes are fine. Yeah, I know. Okay, they can hear you. They can hear you. All right. So what we're gonna do for everybody on the stream, what we're gonna do is Manuel has been with me 3 months now, 4 months, I forget. Third month. And what was your confidence before you started? Okay, and that is pretty statistically resilient, for everybody. Confidence between 20 and 40% is pretty typical. So what we're going to do in this call, and you kind of have an idea what we're going to do, because I kind of mentioned that I wanted to do this type of call. That way everybody else can experience it. And I'm going to post the restream of it or the recording of it. So for anybody that's new that doesn't know me or hasn't seen one of my streams or my posts before, I've been in foreign exchange since technically 1993. I've been trading the market since 1988. In 1994, I got my first professional job as an entry-level analyst for a futures firm. And from there, I wrote a white paper as kind of an assignment to identify what causes the market to move. And that gave me a focus point for the next 3 decades. In July of 1994, that's a 9, I was standing on one side of the street from McDonald's, and I had a cup of coffee in my hand and a newspaper in the other, and I'm looking at the exchange rates, and it was kind of a premonition.
Sorry guys, my microphone was out. I'm not sure why. But I am, if you guys want to jump in on TikTok, I'm doing a live together with Nick. I'm on a Zoom call with him and we're going to go through a very interesting exercise. So if you want to, I cannot have the visual. Or maybe I can actually. Let me share it here.
And how I come to come to discover the inner workings of the market. I first worked at the futures firm, and then my next job was on an overnight desk trading high frequency or high impact arbitrage and high frequency market making for an overnight desk for another firm. When foreign exchange first opened its doors to retail side of traders, and then I worked at Citigroup for a couple of years, and a couple of hedge funds, and a couple of quant houses, a software platform that I designed that I had some business partners on for volume data aggregation, cross-border market making, in arbitrage, interest rate arbitrage, latency arbitrage, that kind of stuff. So I've got a lot of background experience in this stuff. So let's get rolling. If you can hold off on the questions, I appreciate the likes and the follows, but hold off on the questions so we can get down to the nitty gritty without too much interruption. So Manuel, what causes the market to move? Opportunity?
What causes the market to move is value.
And he still has his microphone. You get your microphone on if you can, Manuel.
Yes.
Opportunity causes the market to move. It has zero to do with the candles. Absolutely nothing to do with the candles. But opportunity is seen in a currency, either the dollar or the euro, maybe sterling, but it's not the pair that is seeing the opportunity. It's the individual currency, right? So when that opportunity, let's say it's in the Eurozone and it's an increased interest rate, so percentage, when that opportunity is recognized, what happens is money starts to move or get depleted from the Nostro accounts and move into the Eurozone. So even though we're trading the euro dollar, there's money that's moving from sterling just the same. There's money that's moving from the Japanese yen just the same. Because wherever that the banks can attack this or capitalize on free yield, they're going to do so. And it's free yield that drives everything. But what they do is they see the increase of interest, and this is just an example. There are many factors that identify or cause the opportunity. The interest rate is what we're looking at here as an example. When they see this opportunity, they're going to attack it from everywhere. But what causes a bank to trade is free yield. They don't trade passively on a trend. They trade aggressively on a trend. And I'll tell you now, just to kind of clean the slate and start fresh, rates can only move in a vacuum. If there's no vacuum being a differential between value, remember I said banks look at values of the currencies. If there's no differential between the value and the rate, this is where the vacuum would exist. if there is a differential, that means the vacuum does in fact positively exist. The banks will only trade aggressively 95% of their daily activity, which is a huge amount. They will only trade aggressively when they can capture free yield. So how does that happen? Value, rate, differential, greater than the cost of doing business. So if you think in terms of bankers, bankers want to trade arbitrage all of the time. And they get angry with you when you take advantage of them by trading arbitrage. But what is the cost of a bank to trade aggressively? Again, banks trade 95% aggressively, 5% as market makers. Anybody that tells you otherwise has never seen the inside of limit order book aggregation, so they don't, therefore, unfortunately, do not know. Right? It's just a fact. 95% of banks trade aggressively against other banks around the world, and it's the top tier banks that take advantage of the smaller tier banks. That's why the top tier banks are behemoths, and the smaller tier banks that do in fact trade are just eating up some of the residual of what's left over. But they're all looking for free yield. But the cost of doing business for an institution is about 1/2 of a pip, because they're not trading in one lot, two lots. They're trading typically 5 million, 10 million minimum on a click. Right? So if the cost on the ECNs is 1/2 of a pip, the only other cost on top of that is a commission charge, clearing charge. And that's going to range anywhere for a larger institution to be about 30 cents equivalent, and I'm going to talk in terms of lot equivalent, 30 cents equivalent per lot, up to about 70 cents per lot on the high end. So that means 1/2 of a pip plus 0.3 of a pip, 0.003 of a pip, you've got 6/10 of a pip in total cost. So going back to the differential greater than the cost of doing business, 6/10 of a pip will trigger banks' aggression to buy when the cost of 6/10 is less than the differential. So what happens is the candles move sideways, and then the differential, because the candles are the price, the candles being the price, are the mechanism of entry, but not the currency itself. Most think that they're trading the currency market when they're looking at foreign exchange rates. They are not. You're looking at a mechanism of entry, but not the currency itself, because the exchange rate is just a relationship between two of these things. But the value takes into consideration all of them into one. So with correlation positive and inverse, we know what the value is. But this differential has to be over 6/10 of a pip above the exchange rate, and if that happens, 5/10 of a pip covers the spread. Anything over that, the banks are going to aggressively buy. Until the rate then matches or comes within marginal distance of that value. Now, at the same time, the value could exponentially be running and be a quick market, right? Well, that's what, and it could be doing this, and then the rate would continue to follow it. But this is what defines fair value gaps. But fair value gaps themselves don't look at value. They look at candles trying to theorize what happened already. But here's a fact. The first thing that changes direction on a chart is value. But you don't see it on the chart. And I say it's on the chart because it's the first thing that causes the changes, right? And then the second thing is volume. The third thing is price change. The fourth thing is price action change. So where do you want to be? This is where institutions are trading, value and the follow through of volume. And if you think of value as the sentiment, you have a value differential, that vacuum creates the sentiment. And when that sentiment exists, you then get the volume that's attacking, but surprise, surprise, it's not in the euro dollar. It's in all currencies that are attacking the euro. That's where the volume comes from. And when volume changes direction, eventually it's going to be a price change. That's how it works, right? So what I want to do is take, Manuel, you still here? Yeah, you hear me?
I can hear you.
What I want to do is rebuild the chart and show you a level of transparency that laws have been created to intentionally obscure from your vision. So the first thing that we've got to do is look at how values change. And values changing, we're going to monitor, we're looking at the euro dollar chart, it's a 1 minute chart, but the values will change like this. Here's the euro in blue, and here's the dollar in green. And what I'm going to use is a non-lagging currency index that has two different layers to measure that value. But that value is only a small slice, right? But if the dollar gets stronger than the euro, you should expect the exchange rate turns to the downside precisely right there, with some variance. If the euro is getting stronger than the dollar, then the exchange rate will start to move to the upside. And that is it. That is the trend. That is the follow-through. And when these deviate from each other, it's continuing the trend. Because a value, or the import and export of currencies, can only continue when there is a differential in value. But we use the differential in two different ways. You have the differential of the individual currencies, and then you have the differential of aggression, which causes the volume to hit the market, right? So let's go look at this, or keep this in mind as I put something on the chart, and I'll let Manuel kind of identify the spots that are going to trigger it. Let me put this on the chart here. So what I'm going to attach is a set of non-lagging currency indexes, and this is on a euro dollar 1 minute chart. And let's go here. Okay, so there's the indexes. Let's go back a little bit into history. Thank you for the likes and follows and shares along the way. All right, so Manuel, what do you see happening right here at point 1, point 2, point 3, 4, and 5?
Pretty easy. like you just explained. Point 1, we see the dollar, sorry, getting stronger, so we expect a move to the downside.
Change this color here to something. I'll use yellow for the downside moves. Okay, so we've got a downside move there. What about point 2?
Point 2, we are basically coming out of a pullback and going for a move slightly lower. Maybe there is a little bit of range in there, but very, very slight range.
Okay, what about 3?
At 3, we definitely have a little bit of noise, a little bit of a range move, but then eventually price is going to move to the upside.
Okay. To bring this over, price move to the upside. I'm going to change this to, I'll use blue. And what about 4?
4, we also have a move to the downside, but given the size of the envelope, I think it's relatively small.
Okay, and 5?
We go back to the upside.
So then, that's the crossing of values. So as it does that, what happens in terms of sentiment? So here's where the perceived value comes into play. Right? You got the values, which is the cross, right? right? But what happens here in terms of structure? Everybody knows what structure is. Here's a break of structure to the downside, but structure exists in absolutely everything, right? Sentiment included, and sentiment structure leads the value of volume or the aggression of volume, and that leads the price change. So if this is a break in structure lower across a midline, which is parity, everybody understands what that is. Not price parity, it's neutral parity. So it's a balanced parity. So if that dotted line behind is parity, and you see structure of sentiment breaking lower right there, right?
Yeah.
Okay, it's breaking below its prior low. That means right about there, we're going to get what? A move to the downside. That precedes the transition of values. Okay, so if we go over here and we see structure on sentiment breaking slightly higher, but it doesn't cross or cause the crossing of values, it's just a little bit of a pullback.
Yeah.
So you've got a downward move. Let me clean up some of this. Right? And then what I'll do is insert a rectangle, just so we know we see the sentiment moving to the upside. So what that really means is this is the downward move, somewhere in that rectangle. We don't know where the prices are. I don't care where they are really, but somewhere in that move is that downward trajectory until we get to sentiment moving above that prior high. Right? What about over here? Is it breaking that structure enough there?
No. Oh, sorry. Yeah, we are breaking again.
Breaking
yeah,
again.
We are breaking again. Yeah, there. Yeah.
You've got the index is diverging. That's causing it to break again. So what we'll do is we'll just grab a copy of this and put it right there on the left-hand edge, and then shrink the width of it just so we see, all right, what's happening right here.
That's another pullback.
Another little bit of a pullback, all right? And from there, we've got this low right here. We've got this low to look at, all right? So that's suggesting a little bit more of a move, but that ends up becoming a short-lived move because we break sentiment higher here. So it probably moves to the downside, but it's just a tiny little refined range.
Yeah.
Or a tiny little move. So what I'll do is I'll do one more rectangle there. And let's make it a small one just to cover the width of that. And that's enough for this move. Now, we have sentiment that is certainly pushing to the upside. In through here, do you see any strong breaches to the downside yet?
There's no strong breaches to the upside, to the downside. Sorry, no.
To the downside, but there is some support.
There's definitely some support, yeah.
It's giving some support in here, and then it breaks and moves lower, and that would give us a continuation between here and here.
Right there, yeah.
Right?
Yeah.
Right? So it starts to break higher there. So grab one of these and move it over. So effectively, what we're doing is identifying the impulsive move stronger, and I'll show you how it aligns with the institutions. The next move lower breaks sentiment lower here, right?
Yes, there.
Okay, so we've got another little move to the downside there, and it probably drifts lower enough until we get to here. But you see the values are starting to converge on each other. It's not going to the upside heavily. It's not going to the downside anymore. That strength of dollar is starting to fade away. So we've probably got some range-bound move. But what happens over here?
Same thing. We have a break of sentiment to the upside together with indexes crosses. Yeah.
So I'm going to make that blue. And where does it break to the downside? Right about there, right?
Right about there, yeah.
Okay. And then it tries to break to the upside again here, but it looks like it gets a little bit soft. Maybe a little bit soft right through there, but it looks like it tries to push. And then the values kind of taper off, and it's not really going too far until we get to here. Here is on this line, we've got sentiment that's working lower through here. Technically, we could stretch this out just a little bit because that cross happens after sentiment pushes. So all of this would be somewhat of a downside move. And then to get the last one, you've got a break in sentiment to the upside over here. So it's almost right on top of that prior zone. Get this to move and cooperate. There we go. So it's almost right at the junction of those two. And then it continues to the upside until we see this first break lower over here.
Yeah.
Okay. So what those are looking at is the balance or imbalance of aggression. Right? And that sentiment is to the downside in there. It's to the downside in there. It's to the downside in there until it gets to the right-hand side where it starts to give some sentiment. The upside in this little bit of support. And then it's to the downside here. It's to the downside here until it gets to here. And then it's to the upside here until it gets to right there the first time. It tries to go bullish again and then right there. So if I'm anything even remotely close in these ranges of where prices are moving, that means what I've got is a level of transparency that just walks circles around the market, right? So what's your confidence that we got it?
Oh, 95%.
So, and what is your consistency trading now that you're kind of diving into it? And are you using the alerts, or are you still just are you still trading manually, or hybrid between the two?
No, I'm trading manually.
Okay.
I'm trading manually right now. I have a win. Let's say that if we go by win rate, it's floating between the 70 and the 80% daily.
Okay, so I'm gonna bring the candle. That's pretty good. I'm gonna bring the candles back up and see what we got. So this first move, based upon what value and sentiment is doing, we've got this in through here, and then we've got this in through here. And then we've got this in through here. And then we've got this in through here. Then we've got this range bound move. Oh, by the way, here's that level of support. Right? Then we've got this range bound move in through here. Remember, I said prices cannot move unless there's a vacuum. But the other thing that is constant all the time, if there's no differential between the values, the exchange rates cannot move anywhere but sideways. And then you get a strong move. And then you get an extension of that strong move. And then you get the pullback, and another pullback, and then another extension. Here's where it identified the turn. That's transparency. That's how the markets move. But laws have been created to make sure that you do not see that level of transparency. So, yeah, Shadi, I can only help you a little bit. So, Manuel, what are your thoughts? I mean, I know you're going through this and you're learning, but what are your thoughts every time you do another exercise?
No, it works every time I do one of these exercises blind without the candles. It just makes me realize how simple it is. When you take the candles out of the equation, when you take the chart, you take the wicks, you take whatever, you take everything out of the equation, you just look at sentiment, actually, not even percent indexes, but you just look at sentiment. It's basic, and it's clear, and it's transparent, and it never fails.
Yeah. So this approach, and I mean, I've been teaching this stuff for a couple of decades. But this approach can be done either with the models, right, which are the tools that I use. Now, you can have a traditional set of, indicators. And indicators can do two different things. They can give you analysis based upon what has already happened, and that is not the case here, or they can give you calculations. And that's the models that I use. I use the mathematical component or the programmatic components of calculating what the values are. And that's the most important commodity one can have when they're learning to trade is transparency, because flip side, there are three different personalities for traders. There's the engineer who understands things at this level of study. There's the follower who is more apt to follow, signals or alerts. And then there's the genius. And the genius will always be somebody who takes an approach like this, which is completely transparent and intelligent because it leads the market. And I'm going to show you its lead in a minute. But the geniuses will take a working model, a working method, an effective strategy, and they'll bring a 200 period moving average. They'll bring a MACD or Bollinger garbage cans along with them, thinking that that's going to give them it. Or what they'll do is they'll rely on price action. You notice none of this related to price action, not one bit of it. We looked at the values, and the values create the vacuum, and that vacuum is what's causing exchange rates to move like a bat out of hell. Excuse me. All right, so let's go and take a peek at what the alerts have done here. Euro dollar. Get rid of the chicken scratch for us. So here is, that's so slow, everything right. So here is a little bit of a sell alert that sees a reversal and hedge, right? And then you've got a buy, and then you've got a sell, and then you've got another buy, and then here's the sell on it right there. Then you've got a continuation, and that sees the sell, all right? So we go into a range-bound move. We then look at the indexes and say, okay, it's getting a little quiet. And then we've got a buy entry over here, and that gives this. And then we've got a sell entry over here, and that gives this, and then it gives the continuation there. Let's go to earlier on. It has gotten a little bit quiet, but here's this morning. Right? So you've got a move over here, and that gives a number of dips, and then you've got this, and then you've got this. It goes sideways and it starts to extend itself. It's a little bit of noise in it. There's probably a nominal loss before it goes back into the buy. But again, it's dynamic, it's responsive. It doesn't care about the candles. It's only looking at where value is pushing those candles, or in fact, pulling those candles in a vacuum. Let's go back to a little bit earlier on. I identified what those entries and exits were based upon the alerts, and there they are on the charts. Back this out so you can see it. So early morning hours to midday New York, it's a rock star. To the upside, to the downside again, back to the upside, a little blip, and then back to the upside. Bigger move to the downside, bigger move back to the upside. It walks circles around the market. What are your thoughts? Manuel, are you gonna jump on YouTube?
Yeah, I'm the stream already started, so I will be trading for about probably half an hour, I think, before I go and enjoy my evening. Is 8:00 p.m. here.
So I've got to get going because my little one will get pissed if I don't pick her up from school. But if you jump on YouTube, I'll post your link for you if I can get it in there. Manuel has been with us, would you say 3 months or so?
Yeah.
And you're learning along the way, so feel free to jump on Manuel's YouTube, and he'll tell you what he knows. He's learning along the way, but that's the process. It's wiping. Would you agree with that? Wiping the slate clean, forgetting everything, and then starting fresh.
Absolutely. That's step number one is forgetting everything you know, getting rid of everything you've learned. If you have traded before, get rid of everything you've learned before and start fresh. Absolutely.
So to the question, do I scalp? I scalp, but I allow the trades or the positions to remain dynamic so it becomes a swing trade. But everything is based upon a scalp entry statistically allow that value to lead us into a larger trade. But statistically, I don't take a scalp unless, or the model doesn't trigger the scalp unless it recognizes at least enough to cover the cost being 2 pips. Hey, Patty. So if you jump onto Manuel's YouTube, he started doing some streams there. I'm going to get going. Manuel, thanks for jumping on.
Thank you, Nick.
We'll flip so next week, I think Wednesday and Thursday, maybe Tuesday, but probably Wednesday, Thursday, and Friday, we're going to host another a 3-day free course, completely free, that gives kind of the granular view of using the alerts, which are completely transparent. We'll get through that, or get to that through the Discord if you register. And I think Cindy put the Discord. Manuel trades Forex. I think somebody. Let me see if I can type it again. Oh, I can't type this. I'm not looking there. On YouTube. All right, let's get out of here. Thanks for the likes, the follows, and everything else along the way. I wanted to do a trading room session this morning. We're going to do one tomorrow at 9:30, but to get to that, you'll have to be ready at 9:30 when I post the link. Let's get out of here. Cheers, everyone. Cheers.
Cheers. Bye, Nick.
Cheers. Thanks, Manuel.
All right, we are back on trading. That was a really nice.
Heb je een hekel aan advertenties? Wil je in alle rust naar je muziek luisteren? Meld je dan aan voor SoundCloud.
There was a really nice lesson with Nick. Nice refresher. Really, really nice refresher. So right, let's see where we go. From here, we missed while we were on the call with Nick, we missed a couple of moves to the downside. Not a problem at all. We have another 20-25 minutes. Let's see if we can get anything out of here. So we're a little bit in a range bound mood. Now we see sentiment breaking to the downside. Let's see what price does. We want to see price also breaking below there. It looks good. Let's take this. Let's see if we get a continuation. Now keep in mind, we have the previous highs. Those previous highs are our stop level. I said yesterday also, the way I manage my risk is I'm trading with a 1 to 5 on this account. I have a 1 to 5 risk or leverage. If I lose a trade, on the second trade, I double my position to try and recover the losses. If the second trade is also a loss, then we need to reconsider, because most likely we are in a range. Okay, now we see sentiment making a previous low, although we have some support at this level. Indexes, they cross apart, but they cross back, although we have a decent differential. And now we just gotta let it do its things, and let's see if it decides to break again to the downside. I mean, after all, the downside has been pretty aggressive until now, and this pullback never managed to cross the indexes again, so we are okay for now. Okay, we have sentiment to the upside. Let's see if it breaks. Yeah, okay, that's not good. Little bit of choky here. Yeah, take 2 buys, purely based on sentiment. So we lost about 4 pips on that move. There was all of a sudden a big spike of of volume and volatility, but it did give us, let's see what it does. It looks like it wants to go, but also not. It didn't really break anything. Okay, no, actually that was really a big fake out. So I suppose now we have to see where he wants to go. This range is really fucked up, and I don't know. I'm obviously right now. Sentiment has made a higher low, so we're gonna stay on the higher low and see if we can navigate it and see if it gives us. Yeah, I was very quick in making the decision, and obviously I saw sentiment going, and I thought that can happen, guys. I mean, we wait to see what price does now. So looks like we are still in this range. Looks like there is again support here. The sentiment is not really doing anything, although the indexes are diverging. But we can try and take a buy here and see if we go back to the top of the range. Let's try one more. See if we can get some pips back. It's really joking here, so I don't really think it will go anywhere. Yeah, it can be. I don't know. I don't know if it was something from the broker or if everyone experienced that high volatility move. Okay, now we are taking 1, 2, 3, 4, 5, and 6. All right, let's let it go now. Yeah, obviously that screwed me up. That really screwed me up, and I was too late. I was too early taking the buy on the candles. I was also too early taking the exit, and I should have waited a minute to see where it was going, and yeah, there was a little bit, yeah, that was a mistake. Now we see where we go from here. Yeah, we are pretty exposed on this trade, but I'm confident. I'm confident it will move to the downside. We have some sort of something, but yeah, really the mistake taking the buy there is that the indexes were not anywhere near crossing. They were getting close to each other, but they didn't cross, and I should have waited. So that's the lesson learned. It's pretty expensive lesson learned, actually. But right now we let it go and see what happens. We can, if it decides to go somewhere, because right now we are really stuck. If you decide to go somewhere, we can recover. Very slow market right now. Everything is still pointing out to a downtrend, and everything is still pointing out to a move to the downside. It's very frustrating that we're stuck in a range after those two really nice moves. But we can make it. Let's see. They're still not going anywhere. I really need to see the bid. Bid at what do we have here? 6.9. Then we start moving. Right now it doesn't know where it wants to go. He really doesn't know where he wants to go. There we go. There we go. It's going my way. Let's see. 282. 282 is holding it. Let's see. We go a little bit below. Well, we've been there before, so we definitely have some support here. But we see sentiment making it low. That's okay. I was hoping that was the one that was gonna go. It's definitely has support, and sentiment is still to the downside, so there's no harm, no foul at the moment. I think we've made the lower low, break the lower low. Now we can see that here we are not going anywhere with sentiment. If that's the high, if we break this side, and we can see, there we go. Let's go. Let's make a lower low. It's really not doing anything right now. That's really one of the things that I'm still trying to learn is stay in the trades when we are in a range, and not be like I did over here, be too quick to get out of the trade. I really need to learn to stay in the trade until I really get the confirmation that it's time to get out. Yes, there was absolutely no need to get out. Okay, but I think sentiment is breaking to the downside. Oh, pretty aggressive now. Let's go. That's the aggressive move that we were waiting for. It's not moving too fast, but as long as it moves, we are okay. And we have a little bit of taper on the M1, but we are still on the right side of price. I don't like the fact that we cannot break out of this range. I would like to see one big candle to the downside. I mean, after all, I have 6 positions open with 5 pips per candles. We have all 30 pips back and we are golden. So if I look where we are right now for today, all right, we are down 10 pips. We are down 10 pips right now. We can get them back pretty easy. 2, 4, 6, 8, 10, really easy. If we get anything here, this is just not. We did make a lower low, so that's good. That's good. We also have much smaller risk, because going above here would get us out of the trade right now. We need to do something here now. Sentiment is not doing much again. Now it's going. Just give it a moment to see if he really need to get us out. We definitely have that. We don't have index crosses, so it could be a pullback. We still have highs over here, but these highs are also broken. But it could be a pullback before going in. Let's see. I might be staying in the trade a little bit too long for my likings. That's okay, it's all part of the game, and it's all part of learning also. That's why we are playing with sense and not with real money. We have this 300 level. We'll see if it acts as resistance. I mean, the M1 is tapering to the downside. It could be a pullback. We don't know. We are ready to pull the trigger. We really have to see. We really have to see how it responds. The bid is not breakdown now. We broke the 300 a bit. It did lose momentum, and we have for the moment we have the indexes are fighting each other, and let me see if they cross now. Yeah, they're crossing, so we'll take full leverage on the buy. I hate ranges. Totally hate them. Absolutely terrible. This could be another loss. It just doesn't know where it wants to go. Okay, we see we have sentiment making a lower low again. Indexes are crossing again to the other side. We are fucked here. Do we close this one? I think we can wait a minute. It doesn't know where it wants to go. Yeah, we're stuck in this range. I really thought we broke out of it, but we didn't. Yeah, looks like yeah, it's just range bound. So whatever happens here, this is the last trade of the day. Yeah, trend is down. We should have stayed. We should probably stay in the short. See, sentiment is not doing anything, and yeah, we broke again to the downside. This 300 level is it's really. It was just a pullback. I'm gonna wait a second. I mean, we are stuck here anyway. This low didn't break the previous low. Price is really far away, so it needs to find his way, and he hasn't yet. Let's see. Looks like this is again a pullback from this little up. Question is, are we breaking higher or not? We are. The bid is managing to stay above the 300, so that's pretty good. There we go. Let's see. Is it gonna give us one move before we switch off? Let's see. Nope, doesn't want to do anything, guys. Boy, absolutely stuck in a range. Leaving behind a lot of pips this evening. All the pips that are made during the day in one range. Do it. Everything gets fucked up in a range. There we go. We have that one. So let's see. And like I said, we are in a range, so I really have no idea if this is actually the moment that it goes big. It might just as well go back there. I have no idea. Yeah, guys, ranges. I really haven't learned how to trade ranges yet. They are my demise. They are indeed my demise. And we can see, and I know for a fact that the rule is that when you identify a range like this one, you don't trade. That's the rule. But sometimes the rule doesn't stick into my thick head. I mean, we can see sentiment breaking to the downside. We can see the index as crosses. We had two small pullbacks to the upside. So really, the first sell that we took, we should have just stayed in there. That's pretty much it. We should have just stayed in the first sell that we took. We never had a reason to get out. Here, we shouldn't have gotten out of that trade. These two candles, I don't know if everyone experienced those with those two big wicks or if it was just this broker. That happens also. That happens also. The broker manipulate prices to unstop losses. They give you big spike. It was not that big apparently, but I don't know. Anyway. We're still looking okay on the shorts here. Goal is to try and get as many pips back as we can, but we need to get out of this range, mate. It's really not doing that. Sentiment failing to make a lower low. Also sentiment is not really breaking up and down as it normally does. As you can see over here. It's just a little bit more. Everything is a little bit more. Okay, so we are hitting the resistance level again. Now we have to see. That's exactly where we were before. Now we want to see if he wants to go or not. In all of these, I never had a reason to talk about, yeah, guys. So keep in mind that I am learning, I've said before, and I am very, very aware of my mistakes. I'm always very aware of my mistakes. These two were not buy because this was never really crossing the zero line, so there was never an uptrend. Looks like we have a lot of resistance again here. It just doesn't want to go. Doesn't want to go anywhere. Or maybe it does. Yeah, but sentiment is also not. It takes is one candle like this one for us to get out at a profit. Let's go. Come up. Come on. Let's break this out of this level and let's go to the downside. Oh man. It's like watching paint dry. It's not going anywhere. It's not doing anything. And this resistance is horrendous. There we go. Sentiment to the upside. You know what the thing is, guys? It can be very well that all of a sudden it moves 10 pips. And we have 5 position open. We make 50 pips. We get everything back. Plus more. But I can also be making 50, 60 pips the other way, or 10, 15 pips the other way. We don't know. And this is like watching paint dry. It's not doing anything. So we have sentiments making a higher high, but price is not, doesn't have follow through. Trend is still to the downside. Come on. Let's do something. Yeah, it always moves against me, and the big moves are always against me. And it's the bottom of the range. So for now, we're staying in until we see confidently that it's going the opposite way. There we go, back to the top of the range. Oh, yeah. Now this time we pick value, but we see we don't have follow through with price. Yes, value is actually just support also value wise. There's a lot of resistance. There's a lot of resistance there. Is it going anywhere? I don't think so. Oh yeah, man, this is terrible. Nah, we don't follow that again. We wait a second. The trend did go up, but it could very well be just another little thing like here. This is insane. This is insane how it goes. Basically, we put ourselves into a lot of problems for no reason. We put ourselves into a lot of problems for no reason. Does he want to go long now? We have the differential, but we don't have volume. It's really not giving us anything. This is just going sideways. Oof. This is a big level of resistance that's been. So let's see if we break this one or not. It doesn't look like it. We're just extending the resistance. I would like to take a sell here, but I don't have leverage anymore. I can see it breaking from here and going. That's a possibility. You can also decide to say fuck you. We're gonna see sentiment to taper down, lower low. From here we're going back. Don't know if now is the time that we break. That's a ton of support there. It can really be going both ways right now. It can be that we break over this level, or we can be that we just go back down. I really want to get off for the night, so let's see if we just get into a bit of a move below. Let me see if the bid gets below the 300. So now we're short, so we're looking at the bid, the ask, pardon. The ask 303. Let's go below. Come on, 303, 303, 303 is holding it now. Do we break the 303? And just go stuck there. But right, there you go. See, indexes crosses again. And trend back to the downside. This is really what we should have done from the beginning. And all we could have done here is just hedge it and then watch it bounce in between. If we just hedge it there, we would have risked 4 pips stop. Still fucking stuck. The bid is 308, 309, it's going back up. Index is one across again to this side. It's really not going anywhere. Go, guys, it's impossible. This is really hard to trade. It's really hard to trade. Takes so much patience. And really the best thing you can do if you're in a position and you have time to stay, I'm not gonna do that because I don't want to stay here all night. But what you can do is you can hedge your position. So basically you're in a sell on here, you can take the buy position on here and keep the buy and the sell open at the same time. And the moment that you see a clear direction in the market, then you release one of the two positions and basically you've limit your risk. And then you can take the profit plus whatever else the market wants to give. We need more than an hour already, far too long. Okay, no, still nothing. 303, this 303 level, it's really holding it back. 304, there we go, 300, can we get 299? If we get 299, then probably we see a move. 301, oh, 299, there we go, 297, sentiment pushing a little bit harder. 295. 295, indexes are opening, sentiment making a new low. Can we get follow through? Can we get follow through? No, we don't get follow through. But we're still below 297, 295, 293. Come on. Give me something. 294. We are there. It's just a matter of a little bit of gas. There is no gas at all. If you guys look at the volume here, this has just been so stuck. Little bit of gas, please. Yeah, we broke below the 300 again. Now we have 289. Sentiment is still to the downside. We just have no volume at all. There is absolutely nothing happening. Absolutely nothing. Now we have again 297. We're going at the top of the range again. 294, 290. It's holding. See, actually, a little bit more to my side. I don't need to see up there. Okay, sentiment is trying to make a new high, but price doesn't have follow through. The 290 is holding it back. We are watching at the ask price 290, 291. DM5 has some room. Oh, come on. We've been watching these for 1, 2, 3. 45 minutes. 45 minutes of absolutely nothing. What are the bankers doing in America? Is it possible that there is absolutely no fuel in the market left for the evening sessions? Very, very slow. No, we're still okay. We're still down there, but it's just, I mean, it's really gone flat. And we have candles of not even a pip. If I can get it somewhere around break even, so, or if you give me anything, then I'm out and I can go enjoy my evening. But this is really not doing anything. We've been watching it going into a range forever. And it's basically been at my entry point for the last 5 minutes. Unbelievable. Now we can see no, nothing. Yeah. We see a little bit of something, but then it turns out into nothing. Oh, yo, man. Okay, this is what I'm gonna do because I have had enough of this. I'm gonna end the live stream here, and I'm gonna place a stop loss and a take profit, and I am going to do something else with my life because this is taking forever and is not amounting to anything. So thank you for watching. If you stayed, whatever you saw today is how not to trade during a range. We put ourselves in a very difficult position when we could have got out of here a long time ago, just by staying into the first short that we took and not letting these two candles distract us. We could have just stayed in. We could have probably taken out 1 pip or 2 pips, so could have gone to break even and we could have called it a day and we could have gone to do something else with our life. Instead, we tried to recover a loss and we tried to recover another loss, snowfall into a bunch of losses, and yeah, we got stuck watching this range for no reason whatsoever. So this is what not to do. I hope you had a good time and I will see you next time.